Hi, again a short clip. This time I'll focus on a practical dilemma every sleuth investor faces: when to sell to take profit and when not to. This should be especially relevant for viewers of this channel since somehow most of my stock mentions are up substantially. Assume, for example, you had bought Alliance Data System, ADS, at about 45, because after my video you did extensive sleuthing of your own and became very sure through your own work that the stock will indeed soar back to its previous peak of 290. That is, a six-bagger, at least. Insiders, by the way, have begun to buy at 20, so at 100 today they already had a five-bagger. But that's just by the by. Anyway, ADS stock is now at 100, so you have more than a double and can still have a triple from here if the stock goes again to its previous peak, or maybe even surpass it. Well, one step at a time. So what's the problem? Well, let's say you read a lot of famous people analysis of market valuation, which is now at 98 or 99% of historical peak, and become convinced that this market is cruising for a bruising. That is, you fear we'll soon see a repeat of March 2020 crash with a drop of 30%, or maybe even a repeat of 0809 or a drop of 50%. Ouch! If this happens, everything will go down, even your budding multi-bagger stocks. As they say, when the police raid the cat house, they arrest the innocent piano player too. Therefore, although ADS is innocent and still not overvalued at 100, if your fear of a market plunge comes to pass, you could easily see your ADS go back from 100 to 60, maybe even 50, which would be just above where you had bought it. Double ouch. What to do? The short, hard answer is do nothing. This is both simple and hard. Why simple? Because if the stock is going to 290, if, perhaps even higher, since in the previous cycle it went well above its earlier peak and margins today are even higher than before, then selling some now just to avoid a temporary decline is silly. Besides, how good is your market plunge forecast? Let's face it. If sleuthing a single stock is hard, doing it to the market as a whole is near impossible. I know. I tried. And except in 1987, the market just stuck its tongue at me and kept going. So, your own gut feel about a market plunge may be right or it may be wrong, but you can't know which. You have no advantage there, which you do have in sleuthing stocks, physically. So why is a simple answer of do nothing so hard too? Because it is almost inhuman to see your large dollar position go down by half without having your lizard brain shout at you, sell! Yes, you shout back at your lizard brain. I know the stock is worth more. I'll buy it back later when it's cheaper and lower. But seeing it go down is so painful. Of course it is. But if you sell it, you won't buy it back. Because just as you can't forecast market bottoms, so you can't forecast stock bottoms. You can only sleuth out true value and stick to it. Besides, another cost of selling now would be paying capital gain tax in cash, which you then couldn't use to buy more multi-baggers. Triple ouch. So what do? Do nothing. Just focus on the company and sleuth it so deeply and so well that you become deeply convinced that it's worth 290 at least, so that you too can see the stock falling temporarily from 100 to 50, and you can see it's meaningless. Only then you can resist the call of your lizard brain to sell too early. Yes, sleuthing is hard, but this is what makes you the money at the expense of those who don't do it and sell prematurely. This is especially important for potential multi-baggers I mentioned that just turn around and rose from the bottom, like ADS or Fossil or Astronics, ATRO, or Idonor, EDN, or Embraer, EJR, or others I've mentioned. That's because stock cyclical bottoms in a turnaround are nearly always messy affairs. The bottoming stocks can go up and down 50%, then again and again, before they finally soar to the proper value, and then maybe perhaps surpass it. That's why you must develop an iron conviction the stock is worth the peak price, so you can keep holding it as it tries to shake you off, just like a wild bronco that can run like the wind, but first it tries to unseat you. If you do the physical work without cutting corners, you too could take all the bucking and kicking that the stock will throw at you for the moment it truly takes off. So when do you sell? When the stock reaches its proper peak value, not before, or when your sleuthing tells you that the very thing you had bought the stock for is no longer there. But that's a different story altogether for another video, another day. That's all for today. Let me know as usual in the comments below what you think of the above. Subscribe to the channel. Email the video to your friends so they'll subscribe too. I'll see you next time. And meantime, thank you very much for watching.